I'm being joined right now by Dr. Aliyu Ilias, who happens to be an economist and MD of CSC Advisory Limited, one of the think tank economy and development financial institutions here in Abuja. Very good day to have you on the show, Doc.
Good day. Thank you for having me.
Exactly. So let's get the ball rolling. I don't need to waste time on any aspect of our discussion today. But first, question I need to throw at you is this. We saw something dramatic last week. European Central Bank, the US Federal Reserve, the Bank of England, all of them dropped their interest rate. What was your take on that?
Right. I think it's a good one that they are meeting today because it's a regular thing that CBN MPC meets every time. So we expect them to dissect, discuss, to vote against and in support, and we expect them to come out with a good result that will galvanize and help the Nigerian economy to move forward.
Interesting. But I first ask you, the US Federal Reserve, the Central Bank of Europe, as well as the UK Bank of England also dropped their interest rate last week. So what is your own thought around those foreign central banks dropping their interest rate before we look down at our own here?
Right. I think it's quite instructive. If you look at the US, most of the decision of Trump, we expect them to manifest by now, and that's why they tell you. Recall that since December 2024, they've not even do anything about their rates. And that's quite interesting. So cutting it down now shows that they are having some negative result as it were. You recall that they are having some weak labor issue in terms of employment. And you know that once you are not minding your rate, it's going to affect the employment, it's going to affect production, it's going to affect. So I think they are seeing the result that all what is doing has not yet result, and the best for them to do to encourage employment, to encourage production, is to actually cut the rate, and it's quite instructive. Likewise, the England and other global economy too, they are thinking that there is need to encourage organizations to be able to produce and to be able to employ.
Interesting. So let's come back home now. You know, many analysts and economists like you and my ombudsman will ask, 27.50 interest rate has been on by the Central Bank of Nigeria for over a year now. And we want to really understand, has that really helped the economy in one way or the other from your own perspective?
Right. I think first and foremost, we must make mention that the policy decided to undermine growth because of they want to achieve a reduction in inflation. Then, if you are trying to undermine growth, economic growth, that's a serious problem. You must work the two together, and that's what I want them to realize as they're in the meeting now, that they must find a way to make sure that they help the economy to grow, and they bring, because if you recall that the main reason why they said they are bringing down, they are increasing the interest rate up to 27.5% was because there are more money in circulation. So in the aim to actually reduce money in circulation, they decide to increase the interest rate. But I can tell you, the money in circulation is actually through the federal government by giving states more money. So most states now have more money. So for me, government is sacrificing growth because they want to achieve a cut in interest rate, and it's not a good one. So going forward, I think they have to rethink and look at it critically, because if you don't do it, you're also discouraging some investors.
Exactly. Interesting. But let's consider some arguments that have been put out by economists like your ombudsman and financial analysts are saying that, for instance, the purchasing manager index have shown that we have improved to 52.40. And many are saying that if CBN considers this purchasing manager indicator, they should be able to look at the mirror and say, okay, with this, let us reduce interest rate. But what's your take on that?
Right. So basically, it is clear that even though go to market now, it shows that things are getting reduced in terms of costs. If you go to market, yam, you see pepper, you see Gary. I was told I have to find out Gary has reduced price. So everything has been reduced. But you know the irony of it? The purchasing power is not there. They just do not have the capacity to buy. The money is not in the pocket because money has been eroded by inflation and other negative effects on it. So Purchasing manager might be showing that, but I can tell you that purchasing power is not there for Nigeria. Disposable income is not even enough, let alone to go to the market. And that's why you see that manufacturers are also complaining that they produce, they don't see people to buy. These are what our PMI, purchasing manager indicator, actually look at. We don't have more money to buy, and because of that, companies are also not producing. So we need to do more to make sure that people have more purchasing power.
Interesting from you. But let's also consider another argument that has been put forward. In recent time, we have seen our foreign reserve increasing as high as 41.77 billion US dollar. And analysts are saying, with this increase in external reserve, we should guarantee a better trade balance for Nigeria. And with that, Nigerian central bank should be able to cut down interest rate. Do you also in line with that argument of what they are saying, talking about 41.77 billion US dollar for external reserve should guarantee a better interest rate, and for CBN they should cut down the interest rate?
Right. So beyond that foreign reserve, there are other things we need to see, and that's what they will be considering today. You recall that for us to have this level of foreign reserve, and for us to have this level of interest as well, the interest rate is a positive externalities for foreign direct investors, especially those that invest in service sector. I can tell you, you can see that our service sector is doing well than other sectors, more than agriculture sector and industrial sector. There is an incentive that makes them to invest in that area. So what they investing in stock and a bank, and they come with portfolio, it's because the interest rate is attractive. That's why they are investing in that area. And that's why we must change our narrative that said, don't invest in only service sector. Come and invest in real sector, in manufacturing, in agriculture. Now, the moment the interest rate begins to drop, we might have volatility in our foreign exchange again. Because the stability you are seeing is because the injection of money into the service sector and the growth of the foreign reserve. But immediately you reduce the interest rates by maybe 50 basis points, you see that the level at which you are enjoying that service sector will also get the challenge. So it's a good thing that we're having a foreign reserve that is high. It shows that we are financially, okay to some level, and it also affects the forex as well. So it's a good one that we're having it, but we must also considering bringing down this to incentivize manufacturing sector and small businesses.
Exactly. Interesting. I really want to agree with you on that, because it's very important we balance all this together. Being an economist myself, so I understand the import of this kind of argument being put forward. But let's consider another very interesting argument that has been put forward by financial analysts and economists. Recently, we have seen Naira performance against dollar in a way that it is now a 2.5% appreciation against the US dollar. Currently today, Naira is being exchanged on the official platform at 1,487 Naira to the dollar. And economists are saying, CBN, please take a look at the performance of Naira and also consider your cutting down the rate. Doc, both of us are in this, and we know some of the issues that may arise when we put up this kind of pressure on the Apex Bank. But let me have your thought on this kind of argument being put forward. Naira exchange at 1,487 and cutting down the rate.
It's a good one that Naira began to appreciate. This even dropping from 1,500 that it has been for some months. It's a good one. However, we have to also have what we call cautious optimism. So if they are cutting the rate of interest, they must also consider cutting it maybe by 25 basis points. That will actually make them to also study what's actually happening in the market and to know what to do next. Because if you pick to bring it down, it may also be a wrong signal. Even though some of us think we must go below 1,000 for us to say we are having an economy that we can actually appreciate. Though you also agree with me that because of the cost of import, export is also appreciating. So, and that's another area. It's only because we're not a productive economy. So there have been our opinion time. Because some economies, especially Chinese economy, they intentionally devalue their money to encourage export. So we must now start to look at it. Where do we want to stand? We must be intentional, not taking things by opportunities.
Interesting. But let's consider that similar argument that has been put forward. Inflation have dropped, for the third time this year. Now it is down 20.13. That is 20.13%. From what we had before of over, 21.44%. But what's your own understanding of arguing this way that because of inflation have dropped, we should also reduce interest rate? Let's have your thought on that, Doc.
Well, honestly, I want them to reduce the interest rates. Though I want them to gradually to do that in a gradual manner. So I want them to reduce the interest rates because if you look at manufacturing sector, people cannot go to bank to borrow. Small businesses cannot go banks to borrow. And if these two are not going back to borrow, we will have an increase in unemployment. Our GDP will not go as much. So we must encourage. And a productive economy is the economy that can actually export, that actually get boom, and who can have more money in their pocket. So I think they should reduce, if at all, maybe what they will reduce is marginal, but there should be a reduction by today or tomorrow.
Exactly. Interesting. But let's consider the argument against interest rate cutting. There are some economists, particularly those who felt that the recent flow, just like what you mentioned, the inflow of money across the economy is one danger that CBN must also consider. And they are saying, with the recent, money inflow in the economy, CBN should not consider interest rate cutting. Do you share in that light of argument with some of our economists colleagues who also believe that?
Right.
Go ahead, Doc.
The fact is that when you see money is flowing, is it flowing in government coffers or in private coffers? That's how we should look, because most private sectors are crying. There's no money, and like those the PMI too, people are not purchasing, don't have the power. So for me, I think they should reduce marginally the interest rate, maybe from 7.5% to maybe 27.25 or 27%. They just have to reduce, though, if it is marginal. So as the inflation is easing, they will also be reducing the cost of interest.
Interesting. But let's take one particular argument that many Nigerians on the street will put forward. Many Nigerians on the street also understand the issue about interest rate, even though they may not understand the deep technicality of it. And that aspect is food inflation that is biting everybody's in terms of your purchasing power that you already mentioned. But do you think CBN will also consider that? Because in their last argument, why they maintain the 27.50, they said the food inflation have not really come down the way they want. But the recent data shown that food inflation has come down. And what do you think they will do with the food inflation data coming down as released by NBS right now?
Right. You recall that in July, the food inflation was accelerating, was not decelerating.
Exactly.
It was the last one, August, that will see that it's actually easing off gradually. I think for now, there is no confidence that food inflation will not go, because some legacy problem has been there that we have not been able to resolve. I can tell you there is still insecurity in the land. I can tell you the supply chain of food is also a serious problem. I can tell you that also, I also noticed this in CBN. During the GDP rebasing, the food component of inflation was before 52%. It has been considered to be 40% now in their measurement, with measurement in NBS. That could be what we are seeing that make the inflation of food to appear maybe it's coming down. For me, it has not come down at all, because the problems that bring about the challenges are still there, especially the transport related. Government said they provide CNG. CNG has not trickled down to reduce the cost of transportation. So the cost of transportation is the major problem that's giving us food inflation. Food are still there in the farm. But moving a bag of tomato from Sokoto to Abuja, the cost of moving it may be expensive than the cost of even buying the bag of tomato, which is the problem. So until we look at that area and get food sufficient, you also recall President Tinubu You also recall President Tinubu as at year 2023, August specifically, said he declared emergency. He declared emergency of food security. And of recent, was it early this month, we also see him say they should crash the price of goods. But it does not reflect as expected because we are agrarian in nature as a country. We're supposed to by now see that we are food sufficient. That we don't need to open border like we are doing gradually. You know, that people that are producing rice are now complaining that the rice millers are getting to close their shops. So we must be conscious in making sure that food, which is the highest component in inflation, comes down to the barest minimum level.
Exactly. Interesting. Doc, before I let you go, the house of the Nigerian economists, financial experts are divided. There are people who believe that we should go for 50 basic points, and there are people who believe that we should go for 70 basic point reduction. Where do you stand in this reduction, 50 or 70?
In fact, I was looking at 25% basis points, but for the sake of argument,
exactly,
I'd like to be between 25 to 50%, 50 to 25 basis points.
Do you know that 25 is quite cautionary and is very, very sensitive? And if you check what CBN have been doing the last 1 year, they have been looking at 25.50. But let's see how it will play out by 2 p.m. tomorrow when we'll be hearing the announcement. But Doc, thank you so much for coming on the show, Market Report, today.
Thank you for having me.
All right, so enjoy the rest of your day over there.
Thank you.
All right.